Welcome to the Weekly Wrap. I'm Jessica Amir, a market analyst with Bell Direct. The Australian share market is continuing its April and May bounce back as global economies ease COVID-19 restrictions, lifting business optimism. The butterfly effect has seen us all spread our wings and hit the road, helping fuel oil demand, pushing the oil price to a 10-week high, $34.10 US a barrel, its highest level since the 11th of March. The positive flutter helped U.S. and Aussie equities hit new 10-week highs, with the ASX 200 up 2.7% from Monday to Thursday, while the three major U.S. indices rose about 3% each. Across the globe, the energy and material sectors steamed ahead after the oil rally. The same happened on our shores too. The ASX energy sector amped up 8%, followed by materials up 7%, and the tech sector up 6%. For the standout stocks Monday to Thursday, NRW, Orocobre and Webjet. Firstly, mining contractor NRW, ticker code NWH, dug up an incredible 44% on announcing record revenue of $1.6 billion over 10 months. It also lowered its debt and announced it's on track to meet yearly revenue and will pay the previously deferred interim dividend. NRW has a strong history of success. It has very little debt and its shares have gained over 870% in the last 5 years. That factors in the 30% drop this year to $2.19. After the stellar result, UBS says NRW is deeply undervalued and should grow 97% to $4. Citi also backs NRW as a buy. Now, secondly, lithium company Orocobre, ORE, shone up 21% on news that its much smaller rival, Anson Resources, ASN, conducted an independent report showing the lithium carbonate price is expected to grow from $8,750 a tonne to $12,000 a tonne US dollars by the end of this year. Now, it is a far cry from the 2017 lithium price all-time high, but Citi and Bell Potter back Orocobre with a price target of $3 to $3.75. It's currently trading at $2.29. And thirdly, Webjet flew up 19% with investors buying the dip. It's still 62% off its pre-COVID-19 highs. It's cashed up after raising capital and is slashing costs, but a long way to go before earnings growth is expected by the market. Now, for investors looking for record-breaking signs this week, we saw Fortescue Metals, Ansell and Afterpay shares hit new all-time highs, while Kogan hit a 2-year high. Blackmores and Ramsay crossed their 200-day moving average prices. Now, those technical analysis bullish signals simply mean they've made a strong uptrend and broken above their average price for the last 200 days. Now, this generally suggests their stocks could move higher, but it's so important to marry chart trends with fundamental research. In this case, we know vitamin maker Blackmores' previous financial results were lackluster, but Morningstar expects Blackmores to make a turnaround, forecasting 8% revenue growth and 14% EPS growth, tipping its shares to grow from $78.81 on Thursday to fair value of $81. As for Ramsay, we know the government lifted the ban on elective surgery, but once each state supports the move, that's when you'd expect Ramsay's earnings to pick up. For this reason, Citi expects Ramsay's shares to grow from $67.55 to $72. And lastly, Alumina, AFG, Webjet and Boral closed above their 50-day moving average prices. Citi backs Alumina as a buy, while Boral is backed by Citi and UBS as a buy. And what to watch next week that could move the market needle. In Australia, construction data from the first quarter is out on Wednesday with a minor lift expected. On Thursday, in the US, data on durable goods orders for April is out, with a 15% fall expected. Now, ending with extra trading ideas. Bell Potter upgraded Afterpay this week, raising its target to $51.50 following APT's success in the US. AMA's results came out in line with expectations, and Bell Potter dialed up AMA's price target to 80 cents. And following updates from AAC and JAN this week, both were reiterated as a buy, while Avita Medical was reiterated as a speculative buy. Thanks so much for your company this week. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.